Work together 16.1. The first step is analyzing income statement accounts. So we went through the income statement. Now we're going to figure out which ones are operating revenue, cost of merchandise sold, operating expenses, unrelated to normal operations, or not on the income statement. Remember, we just covered it, so we're going to figure this out. Cash is an asset along with petty cash and accounts receivable. Remember, assets are not located on your income statement, so those three would go there. All of your assets belong on your balance sheet. So we're going to go through and mark these not on your income statement, because these, again, are all assets all the way down to right there. Our depreciation, accumulated depreciation for store equipment. Because remember, that accumulation for store equipment is a contra asset. Oops, I missed a few. So all of those are not on your income statement because they are assets. Next, we're going on to our payables. We have sales tax payable all the way down to dividends payable. Remember, those are liabilities. Assets and liabilities go on our balance sheet. So those all the way down to our dividends payable are not located on the income statement. Okay, then our next section we have is capital stock, retained earnings, dividends, and income summary. Those all fall in our stockholders' equity. Our stockholders' equity is part of our balance sheet. So again, those will not be on our income statement. They are on another financial statement. Okay, now we're getting down to our sales. And remember, we have our columns of operating revenue, cost of merchandise sold, operating expense. Okay, and so again, this might be a little bit challenging, especially now that we haven't done a full income statement, but let's see if we can remember these. Okay, we have our first one is sales, sales discount, and sales return and allowance. Those three are all found on our income statement, and they are part of the column operating revenue, if you look at the top there. So we're going to flip back down here. These are all operating revenue because they are in our revenue section. Then our next group is purchases discount, and purchase return allowance. Remember, those are in our cost of merchandise section in our chart of accounts. So those will go in the column cost of merchandise sold. Missed that one. Okay. Then next we have a list of all of our expenses. Okay. And if you look up at the top again, the third column is our operating expenses. Okay, so we'll go advertising, credit card fee, depreciation, insurance, miscellaneous, payroll, rent, salary, supplies, uncollectible accounts, and utilities. Okay, those are our operating expenses. Then the fourth column, unrelated to normal operations, that is where your interest income and your federal income tax expense falls into. Now that I did this, I know I missed one up here. Remember, we talked about our merchandise inventory. Merchandise inventory is found on your balance sheet or on your income statement. So let's go back here, and that will be in our cost of merchandise sold section. I got a little carried away with the assets. As we continue on with this, you'll get the hang of this more and more as we do the problems. Okay, next we're going to go on to step 2, the income statement formulas. The calculations required to determine gross profit are as follows. Determine the order in which they're calculated. Okay, when we start working with our gross profit, see if you can think of what we do first. we have to figure out our net sales. Second, we'd be figuring out our net purchases. Third would be our cost of merchandise sold. And then the last one will be figuring out our gross profit, because that's what we're looking at. In our sections that we have here, and again, these are going to be a little bit challenging since we went through it fairly quick. Cost of merchandise sold formula. With this one, we're going to start with, what do you think up here? Our beginning inventory. We're going to add our net purchases, subtract out the total cost of merchandise available for sale, and we come up with, or then we need minus our ending inventory, and we'll come up with our cost of merchandise sold. Gross profit formula, we're going to start with net sales minus our cost of merchandise sold, and we'll come up with our gross profit. Our net purchases formula then would be our purchases minus our purchase discount minus our purchase returns and allowances. So that'll figure out, when we figure that out, that'll be our net purchases, because we made some purchases, we gave some discounts, and we purchased some merchandise we may have returned. Okay, the same goes with our net sales. We're going to start with our sales minus our sales discount. Oops, hit the wrong one here. Minus our sales return on allowances. Part 3, we're going to determine the gross profit. So we're going to do part of your income statement. We'll use your adjusted trial balance here, and then it has words that you're going to use for column 1 listed there. Okay, so it says the adjusted trial balance of Superior Corporation for the year ended December 31st of the current year can be found in the question assets. Prepare the income statement, including the heading up to and including gross profit. Enter the current year as 20 --. The beginning merchandise inventory is listed there. All right, so on our top line, we're going to write the name of the business. Superior Corporation. This is a income statement. Then we'll enter the date for year ended All right, so our first section that we're going to prepare is operating revenue. Okay, and our first part of our operating revenue is sales. So we're going to go find the amount for our sales. So as I scroll through my adjusted trial balance, I will come up with, whoops, I went too far. My sales amount is listed right there at the bottom, you can see. So that amount is going to go in this blank, $505,897.40. Then we have our sales, but we have 2 contra sales. So this will be less. We're going to subtract our sales discount, and we'll lift it up there. There's our sales discount of $1,318.55. We also have sales return and allowance listed there, $3,153.26. Okay, remember, we could write another label there, but what we do is we draw a single line under those 2 numbers, and we will add them together. And when we add them together, we come up with $4,471.81. Okay, so we have our sales listed there, and we have our 2 contra accounts. Our next column heading is net sales. To figure out our net sales, we take our sales minus our two contra accounts. So it's $505,897.40 minus $4,471.81, and we would come up with $501,425.59. Okay, so that's how we figure out our net sales, and then we're going to come up with our cost of merchandise section. Okay, and you can notice that this is a heading. It has the colons after it, so therefore it is a heading. So our net sales is done. Now we're going to figure out what did it cost us for that merchandise that we sold. So the first thing we have to do is find out our merchandise inventory at the beginning of the fiscal period, which is January 1st, 20 dash. Okay, to find that, we have to go back up into our instructions, and you'll see there in our instructions it says it's $86,789.15. So we'll plug that number in there. $86,789.15. Okay, that was our beginning inventory. We made some purchases, so we have to go find our purchases. Right there, we made purchases of $203,881.01. Along with our purchases, we have some contra purchases, so this is going to be less. We have to take away our discount and our returns. So our purchase discount is $737.71. Purchase return and allowances, the next one there, is $1,196.01. Oops, forgot the decimal. Okay, you will add those two together. There's a line underneath there. We're going to add the two contra accounts together, and we come up with $1,933.72. Okay, and our next heading, after we figure that out, we have our net purchases. So our net purchases, we're going to take our purchases minus our two contra accounts, and we come up with $201,947.29. After our net purchases, we come up with the total cost of merchandise available for sale. Okay, so to figure out our total cost of merchandise available for sale, we're going to take our beginning inventory plus all of the purchases. So within that column, we're going to take $86,789.15 plus $201,947.29, and we would come up with $288,736.44. Okay, so now we figured out our beginning inventory plus all of our purchase. Then we're going to subtract our merchandise inventory for the end of the fiscal period, which is December 31. Okay, so we'll go up here, we'll find our merchandise inventory. At the end of the fiscal period, it is worth $81,017.26. Okay, so if you look in that column there, this column right here, you can see there's a single line right there. So we're going to use these two numbers here. Our total cost of merchandise available for sale minus the ending inventory. And when we're all done with that, we are going to find our gross profit. Sorry, I was one too far here. We're going to find the cost of merchandise sold. I gotta spell it right. All right. So again, we have these two numbers here, what it costs for the merchandise, our ending merchandise inventory, and now we'll find out what it costs for that merchandise that we sold. $207,719.18. And again, we take this minus our inventory. We still have that inventory available. Okay, then we will figure out gross profit. Our gross profit, we have to take our net sales minus what it cost to sell them, and our profit will be $293,706.41. All right, part 4 is to complete the income statement. In part 3, we just went to the gross profit section. So we're going to go through, and you can see that the part that's completed we've already worked on. So after the gross profit section, we're going to work with the operating expenses. And you'll go through and you're going to list all of your expenses except for the federal income tax. We'll figure that out in just a little bit here. But you're going to go through and you're going to plug in all the numbers from your expenses. So you can do that while I'm doing it. All right, once you've got them all in, as you notice, again, we're not going to use federal income tax expense. You'll see that as we get further down the page. Okay, we've got all our expenses in, so we'll write total operating expenses. And you would go through and add up all of those expenses, and you come up with $201,144.12. Next, we're going to look at what the income from operations is. Okay, to figure out our income from operations, we take our gross profit minus our total operating expenses, and we come up with $92,144.12. $562.29. Our next category, or our next section, is going to be our other revenue. And you can see there's one source of other revenue, our interest income. So we'll go up to our adjusted trial balance. You can see our interest income is $466.20. And we only have one source of that. So we're gonna figure out what our net income is before our federal income tax. Okay, to figure that out, we have our income from operations plus additional income that we made, or revenue. So we'll add those two numbers together and we'll come up with $93,028.49. That's how much we'd make before we paid out taxes. Then we're going to take out our tax expense. So we're going to put less federal income tax expense. So we'll scroll up here. You can see our federal income tax expense is a little over $19,000. So we'll go down there. We'll put $19,000, the actual amount, $879.69. And then the last part here is our net income after. So it's our net income after our federal income tax. So we take our net income before federal income tax minus our federal income tax, and we come up with $73,148.80. And most businesses like to see the income before and after federal income tax. Okay, lastly, we're going to figure out our vertical analysis. And so what we do is we're going to compare all the numbers to sales. So again, our sales is 100%, and we're going to use this number to compare all the time. So our first one, our cost of merchandise sold, we take $207,719.18 divided by our total sales, and we come up with a percent of 41.4. And we'll go through and do the same thing. We take the number that's related to our gross profit, divide it by our sales, and we come up with 58.6%. And again, those two numbers will equal 100%. Then we're going to go down here, our total operating expense divided by our net sales, and we come up with 40.1. Our income from operations, that number divided by our total sales, we come up with 18.5%. And again, you're going to do the same thing with all of these. You take the number, the corresponding number, our interest income, divided by our total sales number. And we'll come up with 0.1% there, 18.6, and so forth. And you should get those numbers right there when you're done.